Get Rich Education is brought to you by Mid-South Homebuyers and thelandgeek.com.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education. This is episode 43. I'm your host, Keith Weinhold. I'm here to help enhance your wealth. We are proud to be one of the few investing shows now carried on iHeartRadio, so we really appreciate iHeart's support of our all-out mission to create wealth for you. Hey, we even had the social internet radio site Spreaker feature Get Rich Education at the top of their homepage for an entire week recently, so we're grateful that so many platforms are aligned with our mission. Hey, we're going to talk to you about your real estate investing strategy today, but let's start with some comments on markets other than the real estate market, okay? It's kind of an interesting time. You've got the S&P 500 index pretty much higher than it's ever been in nominal terms. Okay, the index has never been this high. You've got a lot of individual stocks in the S&P with frothy high PE ratios by some measures. Okay, that's where one share of stock is priced high relative to the amount of corporate earnings that it produces. The U.S. stock market has not had a correction for 4 consecutive years now. Do you know how unusual that is? I mean, 4 years is a long time to have zero corrections by really every historic measure. Okay, a stock correction is when a major index like the Dow, the NASDAQ, or the S&P 500 falls 10% from a recent high. Okay, I mean, that is really getting unusual, but if that's not enough, consider that right now we're in the third longest bull market for stocks ever right now. The third longest. And we're actually just weeks from becoming the second longest bull market ever, okay? And consider that the only one longer was that bubble that really began in 1987, later became fueled by startup tech companies with no earnings, and then it burst in 2000. Okay, that's what happened with the one that's the longest. All right, so recently you've had Fed Chair Janet Yellen. She caused a short-term drop in the stock market not too long ago because when she was asked about stock valuations, she said that they're generally quite high. Those were her exact words, and people parse and pick apart every word. She says, generally quite high about stock market valuations, okay? So if you're holding a basket of stocks, how does that make you feel? Does that make you nervous? Does that make you want to sell to lock in your gains? Or actually, does it make you think you might be afraid that other people are going to sell to lock in their gains, and then if enough other people do that, there will be more sellers than buyers, and then that fear basically becomes a self-fulfilling prophecy, okay? You're supposed to buy low and sell high, so does that mean that you sell out of stocks now? Well, what about real estate? It's been on the rise for a few years now. There's no guarantee that its rise is going to continue either, right? But here's one difference. Real estate hasn't even climbed back to where it was at its 2006 peak. Okay, we know real estate's a local phenomenon, but we're talking nationally here now. Yeah, as measured by the Case-Shiller Housing Price Index, nationally, yeah, that's right, it still hasn't even gotten back to its price from almost 10 years ago. And today's real estate values are really not even that close to those 2006 highs either. Oh, right now you've got commodity prices like oil and precious metals that have just been so badly battered and beaten around lately. And we're also in a world where an ounce of platinum is actually worth quite a bit less than an ounce of gold. Okay, so we got some strange things going on right now. Well, here's one thing to remember about markets, whether it's real estate, gold, stocks, oil, and that is this. Even if a market is priced irrationally high, it can go irrationally even higher because it's controlled by human beings that aren't always rational, okay? So even if a market is underpriced, it could fall lower until it is ridiculously underpriced, okay? So a market that's frothy and overvalued soon falls. You know what else can happen? A market that's frothy and wildly overvalued can become more frothy and wildly overvalued, okay? So what do we know? Well, with buy low and sell higher, we know that you're never going to hit every peak and every trough. So what I always say is all that you can really hope to do is buy lower and sell higher, okay? So one can come to a solid conclusion about this that I'm going to give you without making any prediction at all, and that is this. With stocks, if you sold right now, it is likely that you sold higher than what you bought for, okay? Now, there are a few big real estate zealots out there, and some of their pitches, especially from your local agent, can get really tiresome, all right? And you know what an agent commonly says? There's never been a better time to buy real estate, okay? That gets kind of old. I don't like that statement. There's never been a better time to buy real estate. I mean, basically, that's untrue right now. No, that's not true. I mean, real estate, again, is local, but to talk on a national basis here for a moment, yes, there have been many better times to buy real estate than right now, a number of times in history. I mean, sheesh, 2009, 2010, that was a better time to buy real estate than it is now. But now can still be a good time to buy real estate in the right markets for the right reasons. And we've discussed how even if the value of your investment real estate falls, as long as you bought for cash flow in the right market with sustainable job drivers for the right reasons, you hardly care about the temporary decline in value because that property could be paying you every month better than ever. All right? Real estate investing is not highly efficient, and it certainly is not perfect, but it might just be better than anything else. Hey, and one other note about market cycles that you need to keep in mind if things seem more bubbly and volatile to you lately is this. Consider that when interest rates have been held here, we're talking about the federal funds rate, which a number of other interest rates are tied to. When that interest rate has been held to 0% for so long, okay, we've been at 0% for 7 years, and rates haven't actually been increased for 9 years. I mean, gosh, that is so unusual. I mean, how old were you 9 years ago? That's the last time interest rates were raised. Well, what happens is that this 0% interest rate environment, that means savers are so starved for yield that they increasingly turn from savers into investors, and they go invest in real estate and stocks in order to get some type of return, okay? If interest rates were 5% rather than 0%, people would be content to stay in cash as savers rather than turn into an investor by pouring money into assets and pushing up their values. So that's why you find yourself in a more volatile environment. All right, well, what can you do about this? I mean, how do you minimize that volatility and still get a good return over most longer time periods, all right? You know, really, what should the architecture of your real estate investing portfolio look like then? All right, I mean, really only you can answer that, but here are a few guides to consider, all right? Number one, if you plan to invest in only one geographic real estate market, which is actually what most real estate investors do, in almost every case, I mean, you would have to be almost crazy, or you're more likely just ill-informed to invest in only one geographic real estate market and be exposed to all that risk because you're reliant upon one geography's economy. Well, with the advent of turnkey real estate investing, it is probably easier than it has ever been to invest in markets outside your home market, buying from a trusted turnkey provider, not just any provider, that sells you a fully renovated home already with a tenant in it with management already in place. That's turnkey real estate investing. And it's likely never been easier to invest in real estate outside your home market. When some people learn about turnkey real estate investing for the first time, you know what I hear them say? A few of them say, that just sounds too good to be true, okay? But it's not. It really is true. They will sell you a property renovated, already fully tenanted, and with turnkey management in place, because that turnkey company typically profits on fix and flip economies of scale within their own local geography. Ideally, I recommend to others that they should be invested in 3 to 4 geographic markets, okay? Now, why 3 or 4? Well, if you're invested in too many geographic markets, say like 12 of them, then that's 12 property managers you have to manage. I mean, if you own turnkey rental homes in 12 markets, you've got 12 providers emailing you your monthly rental statement of income and expenses, and you might be getting an email from them for another reason every once in a while, and it just might get to be a mess to track, and things probably would not be feeling so passive for you. Okay, now if your number is too low, like you're only invested in 1 or 2 geographic markets, well, now you've exposed yourself to excessive risk by tying your income to too few markets. Okay, if you're heavily invested in one metro market, and that market is tied closely to, say, oil and energy production, and that sector lags like it is now, you could be dealing with vacant homes because there aren't as many jobs there, no one wants to rent, and now you need to make the mortgage payment on that vacant home yourself, okay? So you don't just want to buy a property with a tenant already in it. You want to pick a market where you have a reasonable expectation that when that tenant moves, you know where the next tenant is coming from, okay? Now, sometimes you just can't quite see these market shifts coming. Most of the time you can, though. I mean, we've had Ken McElroy come on the show and call real estate dumb and slow, so you can usually see this moving and changing. I have heard some investors talk about how they suddenly no longer found it worthwhile to invest in the Phoenix market due to the passage of a law that changed how illegal immigrants were policed, okay? So once in a while it comes along a little faster, so we want to hedge against that. So spread out your risk. 3 or 4 markets are good numbers, and I'd rather be in 5 markets than only 2 markets, okay? Now, it is fun to be a rental property collector for sure, but being in like 11 markets is just too much to track. Too many property managers to manage, too many economies that you might want to pay some attention to as well, okay? Let's say, for example, you wanted to buy 40 rental homes, okay? You could buy 10 homes in each of 4 different markets, all right? Now, let's say there's a scenario where, and I think most of you would fall into the camp where maybe you just wanted to buy 10 investment properties over a number of years, and you wanted to buy those 10 properties in 4 different markets. That might be 3 homes in Atlanta, 3 in Memphis, 2 homes in Philadelphia, and 2 homes in Kansas City, just say, for example, okay? Now there you've got pretty adequate diversification to hedge against demographic and population shifts, and a reasonable number of 4 markets to pay attention to and 4 property manager statements to receive every month, all right? And you might have some other factors there. Maybe you smartly placed something like Panama coffee farm parcels into your mix, and that's smart because it produces cash flow and it's something completely uncorrelated with the U.S. housing market, all right? Now, consider this too. The more rental properties that you buy, in general, the more stable your income is going to be, okay? If you start off just buying 1 rental property, that's great. I mean, that's how a lot of people start out. But if that 1 rental property would be vacant for an entire month, well, then you're going to pick up paying the principal, interest, taxes, insurance, maintenance, and utilities all by yourself. But let's say you're a little bit further down the road in building up to buying your 10 properties and you own, say, 6 properties. Well, now, if you have a month of vacancy in any one of those 6 properties, well, you've still got 5/6, 83% occupancy, 83% of your rent income, so you're not going to feel a vacancy sting nearly as deeply as you would if you only owned 1 vacant property for the month. All right, so how about this scenario? Okay, say that you do want to buy 10 single-family rental homes over a number of years. One thing to be mindful of is that if you're looking at buying 1 or 2 turnkey properties each year over the next several years until you get up to that 10, maybe you're projecting that each one of those 10 properties is going to have a cash flow of $250 a month, okay? Well, one thing you might be thinking is, now, how is 10 homes at $250 cash flow? How is that going to get me financial freedom? That would only be $2,500 per month, and that would only be $30,000 of annual passive cash flow. So how in the world is that going to give me any great lifestyle? Well, it gets a whole lot better than that $30,000 that you're just thinking about now and out into the future, okay? First of all, when you secure a fixed rate loan on a property's cash flow typically rises faster than the rate of inflation. So your the rent income doesn't typically rise faster than the rate of inflation over time, but your cash flow does. That's because your greatest monthly expense, that mortgage principal and interest, is a fixed payment over the life of the loan. That does not rise with inflation, okay? So we're only projecting that rent income will rise at the rate of inflation, but it's your $30,000 of annual cash flow that rises faster than that rate of inflation, okay? I do a whiteboard example for students, and in that example, it shows how a 20% down payment on a rental property secured at a 5% interest rate has cash flow that rises 5 times faster than the rate of inflation. Now, that's a bit of an atypical example, although cash flow often does rise maybe 2 to 3 times faster than the rate of inflation, okay? Here's another reason that your $30,000 of annual passive cash flow will likely be greater than $30,000 in 10 years is this example. There's a fair chance or better that, say, by year 3, where you're building up your 10 properties, say by year 3, you already bought 6 of the 10 properties that you plan to get. Well, that first couple properties that you bought in year 1, they could now have sufficient equity in them such that you could do a cash out refinance of that accumulated equity. We're not going to count on that. We're just going to project, say, that property values did increase over a few years so that we had more accumulated equity. It's nothing we can count on. It just historically and nationally happens over time. Well, those first 2 homes accumulated equity. That money could be used as down payments for your 7th and 8th properties through equity transfers. You're retaining the first 2 and using accumulated equity in those first 2 to buy your 7th and 8th. So you didn't really come out of pocket with any money to buy the 7th and 8th ones. So this can go a little bit faster than what you're thinking, okay? So you've taken cash out of the first 2 properties and basically planted them as new equity growing seeds, if you will, in the 7th and 8th properties. Now, we actually do want more property equity, even though the rate of return from home equity is 0, okay? Like we described in episode 6. We actually do want to accumulate more real estate equity over time, but you want to do it in this way. The power of leverage is amplified when you continually fracture off accumulated equity pieces from any one property and then use that as what I'm calling a seed planting equity into leveraging more property, okay? And, sometimes the course of things change after a while, and before you get up to 10 single-family homes, you might have enough of an accumulated equity seed such that you can plant it into a higher cap rate property like a 6-plex, okay? So maybe after you bought 8 single-family homes, instead of buying a 9th, you have enough equity to go buy a 6-plex. So therefore, you've got, 14, 15, 16 units, okay? Now you're really adding more rental units to your portfolio faster than you would have if you just linearly bought single-family rental homes one at a time until you got up to 10 of those, okay? So yes, over time, you will feel quite a bit wealthier than the $30,000 of passive income that you might only be thinking about today, okay? Maybe the most important thing to remember in getting started with your real estate investing strategy is to do that. Just get started, okay? There are plenty of tactics and positioning, and you're going to understand a lot of that even better when you're on the inside and own some rental property. And you might learn about some problems too. You might have a month or two where you don't have any positive cash flow because something went wrong, okay? But you know how much money you make from the property that you don't own? Okay, that's zero, all right? The only way to win the game is to play the game. You know, when your gut tells you that it's time to act and your head backs it up, you know, that's usually when it's the time to execute, all right? Just kind of think for a second about that saying that deals with experiences in your life. You know, a lot of times people say, it will be over before you know it. I mean, how many experiences have you had where you sort of can't believe a certain period of your life is over before you know it? I mean, how many times have you said, I can't believe this day is over already? This week was over before I know it. This year that flew by, that was over before I knew it. Well, don't let your life be over before you know it, okay? When it comes to investing in real estate, you know, most people have a knowledge gap. And then they listen to a show like this, and then they fill that knowledge gap, but then there's no action taken, and that leaves an execution gap to fill, okay? I think sometimes people want to overcomplicate things. You know, in its simplest form, it's just this. Buy some houses. I mean, it sounds a little funny putting it so simply that way. I mean, sure, there is a strategy behind that simple statement, but if someone asks you about how you grew your passive income, you can simply tell them, I just bought some houses, and you can tell them more if they care to hear it. It sounds so simple that it's kind of funny. I'll be right back. You're listening to Get Rich Education. Are you looking for a way to build monthly cash flow investing in real estate, but without the typical hassles you hear about? While other people flock to compete in the house flipping and rental property markets, now could be the time to learn migraine-free real estate investing. In business for nearly 15 years, Mark Podolsky, aka The Land Geek, has unlocked the secrets to creating significant passive income by investing in raw, undeveloped land. No renters or tenants, no rodents or termites, no renovations or toilet repairs. Imagine achieving your financial goals without suffering through the constant stress that landlords and house flippers do. For more information, go to thelandgeek.com/GRE.
We're Rich Dad Advisors, Josh and Lisa Lannon.
Be who you are becoming. Listen to Get Rich Education with Keith Weinhold.
Welcome back to Get Rich Education. You know, with that commercial, the land geek, Mark Podolsky, he's one geek that you actually want to get to know. Mark is one geek that you actually want to be known for hanging out with, okay? Mark makes being a geek cool because making money through raw land where you don't have to deal with any tenants, evictions, or routine maintenance is very cool, okay? If you're wondering how in the world you make raw land produce cash flow, check out my full feature interview with Mark on GRE episode 27 or start at thelandgeek.com/GRE. You know, and by the way, that probably sounds like an affiliate link I just gave you, but it's not. I mean, not that it would really matter, but some people care about that sort of thing. I don't get any kind of income whatsoever if you go to that link. I think that Mark just wants to see where the interest in his program comes from, okay? Now, some people have actually asked me about income and why I even put together GRE every week since it's a show that loses money, okay? The show's expenses exceed its income by the time that I pay for the software, the sound engineer, the web designer, the developer. You know, in short, my answer is part of it is giving back. It's being that change that you want to see in the world. In fact, you know what? I had previously decided that if GRE were a profitable venture, that I would donate funds to charity. Well, you know something? I've changed my mind on that. I've decided that GRE is going to give back to deserving charities even as a losing enterprise. Yes. In the coming months, I'm going to see that GRE contributes significantly to some charities, even as a money-losing venture, and I'll probably put that on my website, okay? If you want to be that change in the world, go ahead and lead with giving. I've seen enough evidence of that in my life. It typically ends up paying you back every time, even if you don't know how that's going to work from the beginning, all right? Well, how do you think I should do this? Should I be one of those people that kind of holds up those big oversized cardboard check that I made out to the charity and then hands it off to a charity representative and it's like a photo op? I mean, I don't really know if I would feel comfortable putting pictures of that on the website or not because, well, what do you think? I mean, would that really even be charity anymore? Or are you then just kind of paying for publicity almost? What do you think? I mean, should photos of oversized cardboard checks be posted because maybe that act would inspire others to give because they would want to be that person handing off that check to the charity? I mean, do you think that would make it right? So, I don't know. Tell us what you think at the contact page at getricheducation.com. I mean, the important thing to remember is Get Rich Education means more than financial wealth. It means living a rich life. Part of that to me is giving. And sometimes giving even more than one would expect, you know? Live well and give well. What good is my life if I don't make an overwhelmingly positive contribution to others? I mean, if you live well and give well, that's a huge part of a rich life. You know, I had someone tell me something a while ago, and I've only ever heard it from one person, but what he said is, Keith, you have the ability to turn $1 into $2 faster than anyone that I know. I really appreciate a comment like that, but, you know, there are a few other people out there that can do that too. And I'm kind of wondering who can reliably turn $1 into $2 and yet be the biggest giver among those people. You know, this show is starting to give back to me in a way. I did have the incomparable Sharon Lecter on the show last week. Now, unlike most of the guests I've had on the show, I did not have any prior networking history with Sharon, but she liked the show, she liked the mission, and I was able to have her as a guest because she appreciates that I help others. I mean, Sharon and I don't really hang out in the same circles, but with this show as our conduit, I was able to bring you to her, and I enjoyed chatting with her. I mean, that was really satisfying to me. So, well, hey, what do you think about the past several weeks? You know, I've had a lot of guests on. Have I given you some great ideas to help build your wealth lately? You know, over the past couple months, including the shows with some of our guests, I really wanted to help answer your inquiry about how to get started investing with little or no money. That's probably the most common thing that I got back. I don't feel like I have enough money to start in investing. But I wanted to give you more than one answer to that question over these past couple months because not every investment fits everybody. So, you know, we've had the Land Geek, the Coffee Farms, the Loan Officer, the Syndication Event. They're all shows intended to provide you with new investing ideas if you have little or no money to get started. So I hope that helped. There is really a lot going on here at GRE. The date is set. International Coffee Farms will be hosting our Coffee Farm Tour November 13th, 14th, and 15th. You can contact them for details. I will be there on the tour. I hope to meet you. And hey, you can just come along and hang out. You do not have to be a coffee investor to go on the tour, all right? Everyone's welcome, investors or people that haven't invested in the opportunity and want to check it out. You will be in Boquete, up there in the cool mountains, the Talamanca Range of western Panama with those sweeping verdant green hills. If you haven't been there before, you probably looked at the pictures. You can even catch glimpses of Panama's highest peak from there. It's 11,000-foot Volcan Baru. All that, and you're just a short drive from the ocean as well. And if you bought there like I did, you own land that cash flows and you're producing coffee. You own the land. How cool is that? Again, it's November 13th, 14th, and 15th, and I expect International Coffee Farms to probably put more details on their website as the event draws closer. You can still sign up for the syndication event on our events page at getricheducation.com. If you ever wanted to know what it takes for you to pool other investors' money together to buy a big building that you identify, you can go and play big with almost none of your own money, all right, as you pool other investors' money for the down payment. And at that event, you will even meet Rich Dad real estate advisor Ken McElroy there. And don't be intimidated. Ken is a super friendly guy. I hosted Ken on episode 25 if you didn't catch that one. If you're even remotely interested in that syndication event, see our events page at getricheducation.com because that event is in 2 weeks. If you don't have money, but you're willing to learn a new real estate skill, that is totally the event for you. Then there's Mid-South Homebuyers in Memphis, Tennessee, another low-cost strategy to start bringing a stream of passive cash flow into your life. That's something that many of our listeners have responded to, probably more so than anything else featured on GRE to this point, okay? And why not? I mean, the typical already renovated, already tenanted Memphis single-family home that you purchase from Mid-South Home Buyers, it has a rent of maybe $750 or $800, purchase price of just $70,000, and a monthly cash flow of a few $100, okay? So with a 20% down payment and closing costs, you might be coming out of pocket as little as $17,000 to get started in owning your own income property. And just get this, Mid-South provides you with a 90-day rent guarantee, meaning that if your property ever fell vacant for 90 days, Mid-South pays the rent to you starting on day 91, but they've never experienced a vacancy of more than 45 days. They're in Renter City, Memphis, okay? And they also provide a comprehensive 1-year warranty to you on the home with zero deductible. And if that's not enough, they provide what they call a 1-year refill guarantee, where if your property falls vacant during the first year of ownership, their releasing fee is completely free. And all those guarantees are on their website at midsouthhomebuyers.com. Now, I discussed the why Memphis of all places question back in episode 8. And on episode 9, you can find my full feature interview with Mid-South Homebuyers owner Terry Kerr. In fact, I'm planning a real estate research trip to Memphis here this fall. I might even do a show from Memphis on location there in order to give you a Memphis market update and what I see with my own eyes at the street level there. Hey, well, I've got something really exciting to announce, all right? Now, I've gotten a lot of feedback from listeners that tell me that they would like to hear about more turnkey real estate investment opportunities like Mid-South Homebuyers, but in more markets. Well, I've taken some major action on this, okay? And I've been slow to get this out to you because I vet out and study companies very carefully, okay? We have a turnkey investment network that has local market specialists in 7 different investor-advantaged U.S. markets. And this is a network I've been familiar with for quite a while, but more recently I've done a deep dive in learning more about them, okay? I've talked to their principal on the phone and through email. I vetted one of their investment coordinators the same way. And then I made a flight and visited one of their 7 investor advantage markets in the network. And I had a complete tour of their offices, and we drove neighborhoods, and I visited 10 of their turnkey properties. And I really like what I see from their network, okay? I've been very impressed with the network's due diligence, thoroughness, local market knowledge, and what I'll call their submarket filtering, okay? And at times, this network even has some of those same rental guarantees that Mid-South Homebuyers does. So those that are subscribed to our newsletter will be the first ones to hear about this, and it might end up being the only way that you hear about this. I mean, first of all, we still haven't even sent our first newsletter out to our current subscriber list, but we're getting closer. I mean, I just don't want to bother anyone with email unless I think it's something that's going to have a real impact on their lives. So you can get our newsletter and all our great wealth building updates and never any spam by subscribing at getricheducation.com. That's totally free for you to do. You'll really want to hear about the Turnkey Investment Network in the group of 7 investor advantage cities. And it's usually single family homes that they offer, but there are some duplexes, triplexes, and fourplexes that you can buy at times as well. You'll see why I'm doing that more through email than through the podcast, okay? It includes a link to a well-organized webinar with local market specialists in each of those 7 Investor Advantage cities so you can interact and ask questions. You're going to be like, wow, this network of turnkey rental property opportunities is a total game changer. And again, sign up for our free newsletter at getricheducation.com to check out that opportunity. Hey, well, on the next show here, it is going to be the Fourplex show. All right, we've had some high-end guests on the show lately, and now we're kind of going to go in the opposite direction for a bit and really take it down to the gritty street level on the next show. What are some smart tricks for screening tenants yourself? What do you say to a tenant that's late with the rent? What do you look to avoid in buying a fourplex building? Yes, I haven't discussed landlording much yet on GRE, but you'll hear some of that next week. Yes, sometimes I don't like to admit it. I'm not very proud of it, but I was a landlord myself for 5.5 years, which is too long. I dealt with tenants, repairs, rent collections, and it all began when the first property that I ever owned, the first one at all, I never went and bought a single family home or owned a condo or anything like that. I went straight from a renter myself one day to the next day being the young owner of a fourplex building when I lived in one unit, rented out the other 3, and that was huge. It was a great springboard to my wealth, and I want to be able to tell you about that to see if you can optimize that same thing, and you're going to be able to do it better than me because you're going to learn from my experience. Well, the great news is that you can still buy a fourplex building today at similar terms to how I bought my building back in 2002, okay? Today, with just a 3.5% down payment and a credit score as low as 580, you have to live in one of the 4 units for 12 months to qualify for this FHA financing at that low 3.5% down payment. FHA is Federal Housing Administration. So the fourplex is probably going to have to be in your local market since you need to live there 12 months in one of the units. And you can tie up these historically low interest rates with a bigger loan amount, and you will leverage much more than others that don't know about this and just buy a single family home. And you know what? It wasn't until I began appearing as a guest on other investing shows, and I seemed to keep surprising show host after show host by telling them I began with a bang with a fourplex. And, I've since then really discovered how rare it is to do this since being on those other shows. I know it wasn't typical to start with a fourplex, but it's the wealth creator that started it all for me. A lot better than it would have been with a duplex or a smaller property, okay? So it's just going to be another way for you to potentially create a springboard to wealth with very little of your own money. And I love telling you about things like that and when you report back to me and what it's doing for you, okay? Hey, well, be sure to sign up for our newsletter at getricheducation.com for information on that network of turnkey real estate investments. Thanks for being here, but as always, you weren't here for me, you were here for you. I'm your host, Keith Weinhold. Don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.